Welcome to everyone who's joined us. I'm Graham Wright. I'm the Global Managing Director at MSC, which is better known to you, many of you, as Microsave. It's a boutique consulting firm. We've been operating for over 2 decades across Asia and Africa. Work primarily with public and private sectors in digital financial services, MSME, fintech, agriculture, and policy. And I'm really delighted to be moderating this session for Financial Inclusion Week 2022. This is the 8th year of Financial Inclusion Week and is, I think, a great forum for exchanging ideas, research, and perspectives from around the world. So many thanks and best wishes to the Center for Financial Inclusion, which convenes the Financial Inclusion Week. Now, today I have, an unbelievable panel of super stellar people who have been deeply involved in innovation labs. And that's the focus of our discussion today. We're essentially asking the question, do innovation labs foster inclusive financial solutions that improve the financial health of low and moderate income segments? And I think this is a really important question. We know that a lot of startups are out there being fostered by a wide range of innovation labs, but I think we need to ask ourselves very carefully how valuable they really are in the broader context of financial inclusion and financial health. So let me come to the panel. We have Maylise Carraro, who's the Managing Director of the Catalyst Fund, which oversees early stage innovation and impact investing. And she has over 14 years of experience working alongside tech startups, development finance institutions, microfinance bank, and indeed impact investors to pioneer tech and data-enabled solutions that benefit underserved communities in emerging markets. So a real practical experience from Maylise. And Sarah Willis-Artur. Sarah, I think many of you will know, she oversees JP Morgan Chase's financial health philanthropic strategy and impact framework. She also advises the business on best practices to improve products and services. Now, previously, Sarah was a director at MetLife Foundation, where she led the foundation's global digital and innovation strategy. And previous to that, she also worked for the Clinton Global Initiative Entrepreneurship. And finally, but absolutely not least, Priyanka Chopra, who is the COO, the Chief Operating Officer and Managing Partner of Seed Investing at the famous CIIE Center at the Indian Institute of Management, Ahmedabad. She's also a venture partner at the Bharat Innovation Fund. She previously worked in the high-tech industry with Sun Microsystems and IBM on a variety of design, engineering, and strategy roles, and then later in the social impact space, providing access to clean drinking water to India's underserved segment using technology and community engagement. So we have an extraordinary depth of practitioner and also investor experience to work with. So let me just quickly introduce the topic again. So the key question, and I think a question that has perhaps not been asked enough, is do these innovation labs that we all know and love really foster inclusive financial solutions that improve financial health for low and moderate income segments? So we know that fintechs across the globe have been building innovative offerings to support inclusion, making financial services accessible and affordable, and that innovation labs play a key role to foster a conducive ecosystem for fintechs. Now, these innovation labs are uniquely positioned to nurture, support, and scale innovative ideas that advance financial health of low and moderate income customers. But do they do it? Because fintechs inevitably go for need to go for low-hanging fruit, things that can make their financial proposition stand up, for their investors. And the populations that we're talking about, low and moderate income customers, comprise between 70 and 90% of the populations of developing nations. They earn about $2 to $10 a day and have been largely ignored by formal financial service providers. So can these labs and the fintechs that they nurture really foster innovation that supports and serves these segments in a meaningful manner? Let's start with Sarah. In the last 2 decades, we've seen substantial progress being made towards advancing financial inclusion. As we know, since 2011, about 1.2 million bank accounts have been opened. But the Findex 2021 tells us that 1.4 billion adults across the globe still don't have a bank account. At the same time, financial health is gaining ground as an idea. And really, I always think about it as financial inclusion is the output, but financial health must be the outcome. Now, JP Morgan funds 3 of the most innovative labs in the world, the Catalyst Fund that Maëlys heads, the Financial Inclusion Lab in India, which Priyanka works with, and the Financial Solutions Lab in the US. Sarah, when you look at the startups and fintechs coming out of these labs, do they really improve financial health of low and moderate income people?
Sure. Yeah, happy to go into the question at hand, and just wanted to say thanks to Axio and CFI for having us, and what a wonderful panel to be on with our global partners to really discuss this. Naturally, because of our investments, I'll start off by saying we agree that tech has tremendous potential, and in some ways is already fulfilling that potential to make financial services, to make them to be designed with low to moderate income communities' needs and economic realities in mind, to lower the cost, to make them more accessible, and really bring them closer to their realities. But to jump into the question at hand, are they bringing inclusive solutions to market? I'll put an unequivocal yes to that, right? And I would say that what we're seeing is, compared to existing solutions, right? If you look back in time and how we got here, I'll say the best solutions that we're seeing that are truly inclusive, and I think Maëlys and Priyanka have great definitions of how they're defining inclusivity, are the ones that are specifically designed to reach a particular target market. In this case, we're talking about LMI, but there's other ways to think about it in terms of financially vulnerable people, be it to climate change or gender. Although, Graham, I know at MSC side, you've done a lot of work to talk about gender, and they're not a homogenous group, right? Women are half of the population, but certainly a lot of evidence to say that these solutions are uniquely targeting women and other underserved groups. The other things that we're looking for, and why I say yes on the innovation side, is that fintechs have been able to both target these segments, design with their needs in mind. They're often much more agile, they have more flexibility, thanks to philanthropic grants, right? They have some runway to test and learn and iterate along the way, and might not be beholden to certain timelines, right, that other large incumbents would be. And we've also seen a positive trend in the founders who are bringing lived experience to the problem, right? And who have uniquely felt some of the
Is it just me, or has Sarah frozen on us? She's frozen. Oh no!
Mm-hmm.
Okay, so time for the moderator to jump in and rescue. We'll come back to Sarah once she's unfrozen herself. And I'm going to come to Priyanka a little ahead of schedule, Priyanka, but I'm sure you'll manage. As we know, you've worked extensively with the Financial Inclusion Lab in India since its inception in 2018. This is a one-of-a-kind lab that supports innovation specifically for low and moderate income people. What are the ingredients of the lab that make it unique to foster that type of innovation for the target segment? And how do you select the startups that have that focus on low and moderate income people and help them understand the needs of those low and moderate income people?
Thank you for the question, Graham. Let me start off by saying that it's absolutely wonderful to be here with women and programs that have deeply inspired both me and the Financial Inclusion Lab. Thank you so much for having me. So in order to answer your question, it is important to go back in time and to understand the entrepreneurial ecosystem that existed when we first set up the Financial Inclusion Lab. Right, so back in 2017-18, the tech for inclusion space in India was very nascent. While the startup ecosystem, was growing at a phenomenal pace, we noticed that a majority of Indian entrepreneurs were serving the same small subsection of the Indian population that had the capacity to pay, which is the urban middle to high income category that constituted perhaps less than 10% of India's 1.3 billion population. There were far fewer entrepreneurs innovating to solve hard problems for India's bottom billion. And the most often quoted reason was the unsustainable economics of serving this market. Right. And while we firmly believe that the major reforms pushed by the government of India to digitize India through Jan Dhan, which most of you would have heard of, it provides basic bank account to every citizen, through Aadhaar, which is the biometric foundational digital identity for all, combined with the explosive growth in mobile penetration and the laying of what we call public digital infrastructure in the form of the India stack, had already created an enabling environment that could solve, for this cost economics. But despite this very large opportunity, we did not see a lot of entrepreneurs flocking to the space because they lacked the support infrastructure and the risk capital required to succeed. And most accelerators, and we did like a very comprehensive study before designing and launching the lab. Most accelerators at that point were also offering sector agnostic programs with very standardized bouquet of offerings. And consequently, in our design of the lab then, we were looking to solve for three critical needs. Number one was, like you said, the lack of understanding of the low and moderate income target segment and the potential of this market segment, due to which most fintechs at that point were focused on serving the tier one customers. And how did we do that? So we did that by incorporating deep technical assistance in the design of the lab, where we said LMI focused practitioners and experts would come in to provide structured support of the customers, knowledge about the customer segments and insights, about the problems that they faced. As you're aware, we partnered with MSC to provide this, very critical support. The second gap, that we were looking to solve for was limited uptake of digital financial services by the LMI segment. And why was that? Due to unsuitable products, perhaps unsuitable designs or unsuitable delivery channels. And to solve for this, what we did was we brought in mentors, that would offer significant handholding, that would support creation of these relevant products designed from the grounds up, would provide structured business mentoring to identify the right business models and access to incumbents for piloting opportunities. This is absolutely critical. The final problem that we wanted to address was low investor interest, because it's just a very tough market, very challenging business models, uncertain paths to monetization. And at that point, there were no existing templates of success. And in order to mitigate this, what we did was we said we'll bring in catalytic grant support that would allow rapid prototyping and pilot implementations to every startup in the cohort. That would, this would help them establish viability of the model, viability of the market, and would also design ample showcase opportunities with the right set of curated investors. So these three elements put together have allowed us to create a very unique tailored acceleration program for disruptive early stage fintechs, which are focused deeply on the LMI segment. Our North Star has always been the target segment. And we do deep diligence on the founder's commitment to serving this segment in both qualitative and quantitative ways. So the number one check is, what is the problem statement that the startup is looking to solve for? And is that problem statement rooted in the LMI context? We evaluate in multiple ways, through the application form, through conversation with founders, So conversations with their customers on, how is the solution being positioned. We quiz the founders on quantitative metrics, like, what percentage of the customer segments come from the LMI segment, and how do they see that changing over time. A lot of this put together helps us understand the founder's commitment, to this, critical segment that we all care about. And although we've had our startups pivot multiple times, they've also shut down in difficult situations. They've been acquired, but we have never seen mission drift. In fact, in the handful of cases where our founders have had to shut down and have started, new companies again, they have also been in service of the same LMI customer segment.
That's brilliant. And I mean, the very fact that you've had so few or no mission drift is extraordinary, because I mean, the temptation for all startups is to drift up market where the more easily accessible, profitable business model sits. I guess, and I'd be interested to hear what Mailis has to say about this, because India and to a lesser extent Bangladesh and Indonesia, these Asian countries have such large populations and gradations of moderate and low income people that I suspect part of the it's easier to make the business model stand up in those larger populations rather than doing it piecemeal across smaller populations in different countries with different regulatory environments and different market realities and so on, as many African entrepreneurs face. But before I go to Mailis on this, what I want to do is welcome Sarah back. Her computer crashed rather like the British economy. I'm assuming that you haven't let Liz Truss too near your computer, Sarah. You are in full flow talking about the role of startups and can they really improve the financial health of LMI people. So if you can resume your full flow, I would be delighted.
Thanks for giving me the floor again. Appreciate that, Graham. Yes, the irony of talking about the potential of tech while tech fails you is not lost on me. But yes, to your first question is, are we seeing innovative solutions through our investments, through the labs that we fund? Yes. That is unequivocally yes, and that's been the case for a number of years. There's a couple of startups that I could pose as examples of where we're seeing this, and then get to your question on, okay, so they're innovative, so what? Does that mean they're actually impacting the financial lives of low to moderate income consumers? So as I was saying, we look, and I think Priyanka was getting at this too when I joined, that we're looking at, are they aligned to the target market, and have they essentially defended that they're going to, as they grow and as they see additional pressures, continue to stay mission driven. But one of the best litmus tests to understand if that's going to happen is how they're designed from the get-go, right? And so a red flag for us is when a founder or a company talks about whether or not they are essentially going to go down market as they grow, right? The faith-based model, right? Oh, we're proving product market fit now, but don't worry, as we grow, we'll go down market, right? I have yet to see that happen. So I'm always looking for, like, from the very beginning, right? Are they solving these needs? So Propel is a company, and they're in the US, and I thought I'd bring that perspective here since we have a great range of emerging market perspectives. They are a company that went through our lab. They received mentorship, technical assistance, financial assistance, and then last year a follow-on investment from our impact finance team. And they are extremely focused on LMI customers, and without doubt, it's because they thought about, okay, what are the benefits, the public benefits that are serving these segments, and what are the pain points? So one pain point was with SNAP benefits, as we say in the US, which is the food stamp system. And they essentially started out by solving a very simple challenge of actually seeing your balance. and then it evolved to benefits access, looking at other savings vehicles, a debit card, access to employment opportunities, et cetera, the whole spectrum. They're serving 5 million people on a monthly basis. And so to flip the question, that's very innovative. It's aligned to the target market, but are they improving the financial health of their customers? So if you look, and I think this is where metrics, which we'll talk about, I think later in the show, where it can be deceptive or in disguise, I'll put it that way. So one of the things with Propel that we've learned is essentially you have 5 million customers using their platform every single month. They are able to stretch the SNAP benefit or the food stamp benefit that they receive by, and it might not sound like a lot, but 1 full day each month to further their food security and their financial security. So in essence, that's maybe not a financial health outcome that we look to see, but it has a massive impact on their ability to manage their volatility, their cash flow, and other financial stressors that they may face day to day. So again, an example of how we're seeing the impact, but not quite as apparent as obvious as it may seem as other apps that are talking about, oh, X billion dollars saved or X billion dollars in debt reduced, right? Those are great examples too, but not always easily, and the Propel example is a little bit harder to aggregate and talk about at that portfolio level. So I'll leave it there.
Great. Well, that's really interesting. Thank you so much. So much. Maëlys, you've been managing the phenomenally successful Catalyst accelerator for many years now. Can you give us a few examples of the sort of solutions that Catalyst partners have offered to LMI segment? And how do you feel that these have enhanced financial health?
Great question, Graham. And first of all, thank you for the compliment. I'll take it. I don't know that we have yet proven the success of all of the startups, because obviously startup innovation is a long game, but we certainly tried. So I'm happy to actually share practical examples that very much resonate with what Sarah and Priyanka have already shared. So our portfolio at Catalyst Fund, which has been actually accelerating inclusive fintech startups for the past 7 years, we started in 2016 in collaboration with JPMorgan Chase and other partners like the Gates Foundation, FCBO, PayPal, and Mastercard Foundation, is very diverse. So we actually have solutions that are pure, what I classify as pure fintech plays, as well as startups that have actually innovated on embedded finance models. So actually the product they provide to the LMI customer helps them tackle a challenge they have in daily life, which is different than accessing a financial service in and of itself. For example, access to energy, education, or digital commerce solutions, for example, but they're enabled by financial services. So because of that, I'll give you a few examples that actually cover the spectrum. So on the pure financial services play, we've seen very successful companies, for example, like Chippercash, which is a unicorn in our portfolio, obviously a much celebrated African fintech startup that provides money transfer and remittances services to now millions of users across the world, and recently actually enabled a international remittance service as well, because it was born as an inter-African country money transfer service. And with them, obviously, the growth has been astounding. Like 6 years ago, actually less than that, 5 years ago, when we worked with them, they had a handful of customers. Today, they serve millions and billions of assets that move every day, and have raised, and have reached unicorn status, because they've raised also a lot of funding at a $2 billion valuation. So that's the kind of story that is successful on the commercial front, but also has really enabled a lot of LMI customers to remit money for their family members and also for their businesses, because they actually have a product dedicated to small businesses and micro businesses to move to make payments across countries. And then we also have companies like Cowrywise in Nigeria, which is a company offering investment products and savings products to primarily youth clients, but not only. And they've also seen incredible growth, and it was a very specific product, right, solving a challenge that is not easy, right? So usually savings and investments is not the product that a lot of fintechs lead with, but they've managed to actually make it work, and combining that with financial tips and educational content that has been very engaging. Yet another actually aspect of fintech that is usually not celebrated enough and that reaches good results typically, but they've managed. And on the other end, we have other companies on the embedded finance side. For example, companies like Wasoko, formerly known as SokoWatch, which offers a digital commerce solution for micro merchants in Kenya, Rwanda, now Tanzania, and many other markets now across East Africa, and even West Africa most recently, where the financial element is embedded, right? So they basically provide credit, like embedded credit, in the digital commerce platform for these micro merchants to order stock on credit when their cash flows may be low. And what that does is obviously allowing the owners of the micro shops to smooth their income, smooth their cash flows, purchase products so their revenue is greater on a week on week, and then repay once that the revenue has come in, and that allows them to then grow their business, access more products, etc. Another example of this is companies, for example, like accelerators, most recently joined our portfolio, which provides a solution for aquaculture farmers in Kenya to via actually an IoT device to improve the way that they feed fishes in ponds, which is called precision feeding, and therefore increases the yield, so the amount of fish that they can actually produce and then sell, and even the amount of income they can get on a per fish sold measure. And they offer similarly a buy now, pay later product that is integrated in the platform, allows the farmers to purchase the right feed at the right time and the right points in their production cycle. So these are just a few examples, and I won't last too long, but what we're seeing is that there's innovation in the way that financial services are distributed. Shipper is an example, where super easy to engage, carry-wise, even to Racco, for example, on the insurtech side. But then also in the way that financial services integrate with other essential services. And that has been, for us, a major learning of our portfolio. And we've seen a lot of growth potential actually in that bucket of innovations, where you're bundling the two things, right? Financial services as an enabler. So to your question, are they actually improving financial health? The answer to me is yes, and we are measuring that today, but financial health is a long game. So it's something that needs to be tracked over a long period of time. And I think, we're at the beginning of seeing where these innovations will go. So I'm excited actually to follow the journey of these startups as they grow, as they scale, and see what is going to happen next. But already today, we've measured a few of these metrics, and we'll talk about it later a bit more, with the help of 60 Decibel, which is one of our partners to do impact measurement. And we've seen, for example, that the carry-wise customers, 60% of them live below the poverty line in Nigeria. So, we're talking actually below $1. And 49% have reported actually already improving their ability to save today on a month-on-month basis. And 69% reported increased financial stability thanks to the platform, which is actually huge numbers in the context of financial services. So yeah, and other solutions as well report NPSs from users of over 88. A recent company, Mujer Financiera in Mexico, did this, and it's honestly very encouraging because it's high number when you can benchmark with traditional financial service providers, where typically it's quite lower.
Yeah, I mean, that is really impressive, really impressive. And your point about bundling products, I think, is really important, because we're seeing this in the rest of the world. We finally have an answer to the elephant in the room question on financial inclusion, i.e. financial inclusion for what? And because of the digital revolution, we can answer that question in the context of the real world economy. And as you say, when you start embedding financial solutions into value chains and into other business activities, or indeed health, education, etc., suddenly you're able to answer that question: financial inclusion for what? Which comes to a great relief to me, but it's a bit late. I'm towards the end of my career, and only now can I answer what on earth I was spending 30 years for. But anyway, we'll leave that aside. We're going to move on to the next round of questions. This is the last round, so I'm relying on those of you out there with smart questions and a lot of inquisitiveness to send questions on the platform, and we will do our best to answer them after this quick round on measurement of financial health. We know that donors look for a theory of change that is measurable, and innovation labs report against different metrics, very often customer outreach or B2B partnerships or funding raised or jobs created or whatever. And there are metrics to measure financial health, but is it really feasible and practical to measure it? The ones that I've seen are very often immensely complicated and over-engineered and difficult to do on an ongoing basis. So what I want to ask you, Sarah, is in the context of the 3 labs that you fund, how do you set about measuring financial health?
Yeah, so measurement, everyone's favorite topic. And I will preface everything with, it's really difficult and no one has quite figured everything out. However, there is a lot of positive momentum. I think my partners here on the call will speak to how their models have really, as Maëlys said, been able to tap into that, but it is a long-term game. And I think collectively, if you look across all of the funding that is going into innovation labs, be it incubators, accelerators, whatnot, we still aren't fully aligned on what the North Star is. We may have solved the inclusion debate, right? But some of us are talking financial health, some of us are talking financial resilience, which is particularly relevant to today's economy, whereas others are looking at it more from an economic mobility standpoint. I would argue perhaps we'll never fully agree on the terminology, but that's really besides the point. We're really good collectively about talking about those other things, right? Follow-on capital, maybe jobs created, thinking about crowding in capital for other innovation labs, et cetera. And at the very highest level, I'll read some numbers of the impact we've seen across our 3 labs, but then I'll talk about a couple caveats to that, right? It's gonna get real. So we know across the labs, the companies that have participated in them have served over 50 million customers, right? That's a very large number. Having helped those customers save $3 billion in savings, 420 million in fees, and settle over $20 million in debt. Without looking underneath the hood, that sounds extremely impressive. But I will be the first to admit some of those numbers are mostly driven by outliers. And those companies that were able to really cut through and have a sophisticated measurement system at the get-go. And now we're not claiming that every company has to have that. And to my Propel comment, this could look different for different companies, because the companies might not all be B2C. They may be B2B, or they may be B2B2C. And Maëlys's comment around embedded finance further complicates, right, this question of how do you measure financial health. So we think about it on 3 levels. One, of course, the customer. That's we have a theory of change, as you rightfully said, as a donor. That's at the end of our theory of change. But to get there, you have to think about the layers, right? And so it's impact on companies as well. And are they growing and remaining mission driven, right? Are they experiencing mission creep? And then the last piece is on the ecosystem, everyone's favorite term. No one has a great definition for, which is really thinking about our regulators, thinking about policies that are incorporating these new business models. Is there more funding going to inclusive fintech? And will we finally reach a point where we're not talking about fintech for good, we're just talking about fintech, right? Because what's the rest of fintech? Is it fintech for bad? No, not necessarily. So it's really about the mainstreaming of this concept and the innovative models that I think we're collectively trying to scale. I won't go into explaining my partner's work, but I think we like to think we work with the best in class. I think we do, and Mylis and Priyanka both have respectively their own ways of measuring it, whether it's through the AAA framework, Mylis you'll probably want to talk about, or Priyanka, I think your lab with MSC's technical assistance has also done a great job of thinking about gender in a more nuanced way, and also the ecosystem of engaging governmental actors. RBI and the payments platform in India has been truly transformative when you think about individual customer, company, and then ecosystem level impact. I think the last thing I'll end on, Graham, is that another layer, yes, we funded 3 distinct labs across geographies, but we also felt that it was important to say, okay, how can these labs learn from one another? How can we lift up insights, best practices, and get away from this sense of proprietary, oh, we have this measurement framework, we apply it for this company and not this one, and really lift them up for the industry. So we funded Excel labs, extra large or cross learning, depending on how you take it. And both Priyanka and Mylis, their teams have been involved, as well as the Financial Health Network's lab in the US. And I'll let my colleagues speak for their experiences, but it's been largely beneficial in cracking this nut on how best to measure, as well as taking in their unique experiences, such as with 60 decibels or with locally with other Indian ecosystem actors.
Excellent. Okay, well that's really helpful, Sarah, and we'll look forward to diving into that when we come to Mylis. Before then, I just want to ask. Sorry, I want to come to Mylis and ask her about the future of what successful innovation labs will look like, because we've seen a report recently from Capgemini that's saying that 90% of innovation labs fail because they've got poor vision or limited resources or lack of understanding of problem statements, etc. So what does the future of innovation labs look like, and how can they shape inclusive and, more importantly, enhance financial health of the end customers? And Mylis, please also feel free to talk about the work you've done with 60 decibels and the AAA.
Absolutely, great question. I wish I had my crystal ball. You should have given me notice. I could look into the future and tell you.
Standard issue for you.
Correct. Well, it is an issue that we spend a lot of time thinking about for the sector. What is the role of labs and other sort of innovation catalyzers, for lack of a better word, and no pun intended with our own name, or facilitators in this space. And at what point do we need to cease to exist, right? Or do we still need to continue being there and actually being a force for more innovation for low-income segments across emerging markets in our case? So we'll start by saying that I don't think the failures that we tend to see, as you rightly pointed out, it's rarely actually on the impact side, because we are often, at least labs that were created with the sort of impact mandate and that is core to what they do, are skewed for selecting companies for impact. So the companies that usually come through when that's measured appropriately, we'll get into that, tend to still achieve results and measurable impact, at the user level. However, where we're seeing challenges is actually on the commercial side. So when you refer to the sustainability of the models themselves, and the way that these labs are structured so that they can continue to support over a longer period of time that matches the time required for financial health results to materialize. Because as we said, it's a long game. And this is a topic that we have engaged the Excel Lab group around. How can labs be more sustainable in the future, continue to focus on measuring impact at the user level, and do so to a point where we feel satisfied with the way that the market, where the market is at, where maybe labs are not necessary anymore, right? And perhaps it's another instrument that you need. So what we've seen through that engagement with the other labs is that one key issue in terms of sustainability is clearly the availability of the right kinds of capital that match what's needed on the ground. And so we are seeing now greater innovation in terms of design of labs that take different kinds of capital. We ourselves are now actually experimenting with this, where you are blending, commercial capital and philanthropic capital, but try to again have enough of a timeline, so enough patience and risk-adjusted capital, so risk-taking capital that allows you to really try and fail, because that's our role. We're there in the market to actually enable innovations that are unproven, but can get somewhere, right, and can be really impactful, and work alongside the founders to do that. And unfortunately, there isn't out there, in spite of maybe common opinion, a lot of capital that is as patient, as risk-taking as what's needed. So that's definitely a key challenge I still see that is preventing these models in the future, from maybe increasing the success rate. And the other, I think, in the long term, what would it look like is also being able to clearly articulate and measure, how have we changed users' lives, like through startups innovation, through these products. So, the way we look at it, to answer also the other question, is with a framework we designed called the AAA framework, which basically measures how products are truly accessible, affordable, and appropriate for low-income customers. And we do that at the user level ourselves, collecting data from the startups. We have the luxury of having a very hands-on venture building process where we are still part of the teams that we build the infrastructure, like with the companies, to collect the data over time. That helps immensely, as well as with partners such as 60 Decibel that really collect the information on the ground. And that's one way. And the other way is that we actually, because of our venture building, from the beginning, gain a very practical understanding of those user needs, and therefore can see the gaps, and again, work alongside the founders to make sure the models are impactful from the beginning. So it's not just a measurement issue. It's actually a, design for user centricity and solving real problems on the ground issue. And that, I see that as a key role that the labs play. So in the future, I think that has to be critical to any lab that exists, is continuing to have that practical understanding, being grounded in what users need, understanding what the gaps are, and drive the innovation in that direction. So I think that's the key. And then the other is certainly the innovation in design and flows of capital. So more blended structure, more patient capital coming in, but catalyzing also commercial capital so that we make the business case for these labs to exist. And those two, I think, will then drive success for the startups and for the users. So I'll stop here, but we can go deeper later through questions.
I think, there's some really important ideas in that. And I think one of the other things that we've been looking at that is important also is to start from the very beginning thinking about who you're going to work with to scale solutions. So to bring, to bring large banks and other formal sector players that have the customer outreach and might want the fintech solution. So for example, in India, we're working with India Postal Payments Bank, So enormous outreach across the whole of India. Now, and now we're running hackathons with them to solve specific problems that IPPB face. And I think that's tremendous opportunity because you've built in for the startup the reach from the very beginning. And very often it's that scale that is the real, one of the real problems that they face. So, yeah. Priyanka, finally, let's focus on success. And we've just heard enormous success from Mylis. We know that LMI people are constrained by challenges that impede their path to inclusion. So lack of access to enabling infrastructure, limited digital capability or literacy, volatile earnings, etc., etc. This is a vulnerable but not homogeneous group. Given that context and based on your experience, what are some of the best practices that innovation labs can follow to promote inclusive growth for LMI segments? How do our innovation labs in the future draw from the ecosystem in which they're operating?
So great question again, Graham, and I also resonate with a lot of points that Mylis made. As I said earlier, in our experience, the number one requirement, even before we start working with startups, right at the screening stage, is to evaluate for commitment to the target segment. The Financial Inclusion Lab, for example, is now on its 6th edition. We've cumulatively accelerated over 55 startups that are reaching about 30 million customers in the LMI segment. They've raised upwards of $150 million. There have been pivots, yes. Like I said, there have been shutdowns, pivots, acquisitions, but amidst all of this, there's never been a pivot out of the LMI segment, right? And therefore, commitment to the segment has to be a non-negotiable for anybody looking to build a lab to service the segment. Coming to the post-selection support infrastructure, it's important to, I think, number one, build customer context. In typical startups, founders are advised to build products and solutions that they themselves will use. But in the case of an LMI-focused business, this will not hold true. The founders typically do not come from this segment, and therefore they lack understanding and empathy for the customer. Copy-pasted, one-size-fits-all approaches are not going to work. They will unnecessarily consume a lot of limited resources of the startup and delay the discovery of a product-market fit. And therefore, one key component that we've built into our design is an extensive immersion into the customer's ecosystem. Mapping the customer's behavioral traits, their capabilities, understanding the social and economic milieu, what are the regulatory and other constraints, that will help identify and sharpen, that urgent and important problem, that is solvable. And like I said earlier, we provide this support through a mix of customized technical assistance with LMI practitioners and mentoring by industry and domain experts. The fuel for all the action is, of course, provided by the catalytic grant support that we give to every startup in the cohort. Perhaps I should take an example, to really make this real. So in our very first cohort, we had a startup that came in looking to build solutions that would enable low literate customers to use their smartphones with ease. They had technical capabilities, they had design capabilities, but the product strategy was very unclear. Through immersions with their target customers, through conversations with large banks and FIs, the lab was able to counsel the team that the real value lay in using their design and their tech capabilities in building solutions that would enable low literate LMI customers to move from assisted to self-serve modes for accessing digital financial services. We facilitated several partnerships with incumbents and other market access partners to help them pilot the voice-enabled UI/UX solutions. The company has now been able to build speech capabilities in 11 Indian languages, and they are currently helping over 1 million customers on a monthly basis access digital financial and agriculture services. The second thing to keep in mind is distribution. Someone once told me that a business is merely a product or service that has found distribution. And this is not as easy as it sounds, right? Especially for the LMI customer segments. While the numbers may be large, for all of the problems you mentioned before, the lack of homogeneity, volatile earnings, limited literacy, limited access to infrastructure, they are very challenging to reach. And even if you do reach them, a big barrier to overcome would be trust. And therefore, leveraging the right trust channel to reach them through intuitive product designs and the right communication strategy becomes absolutely imperative. And therefore, innovation labs should focus on building the right partnerships with channels that the LMI segments trust, so that they can enable faster business model validation and growth. Attention should also be paid to product and interface design to ensure that they're localized and intuitive. For example, we have UI UX experts, that work individually with every startup building DFS to help them think through, what is the, for example, call to action, that every screen, of their application is giving out. Founders often also need support with negotiations and deal making when it comes to working with large incumbents.
Yeah.
Third big, support infrastructure to build in is access to funds, and for this, regular touch points with the right set of investors, so that the lab can understand their LMI thesis, to educate them on the scale potential of the use cases and problem statement that are being supported, to help them gain familiarity with the customer segment being supported. All of this is very important for startups to be able to raise the critical next round of funding that will fuel their growth. The best of innovations will wither away and die in absence of funds, right? And so while we work proactively with founders, to help them do their investor pitch practices, we offer them feedback that helps them articulate their stories better, but we've also needed to work with investors to educate them on the potential of certain tough spaces and problem statements that our startups are trying to solve. And finally, I cannot emphasize enough the need for continued ecosystem engagement. This has also been highlighted by Mavis and Sarah. Surfacing and sharing insights and learnings from business models that we are supporting, evangelizing again the potential of the customer segment, building networks with the right set of stakeholders, including regulators, policymakers, large banks, FIs. All of this put together will help inspire more entrepreneurs to build solutions for the target segment. It'll enable market connections, support inclusive product development. One of the things that we've started doing recently is engaging, like Sarah said, trying to build a more nuanced gender strategy. We saw amongst all of our cohorts, while there are, about 40% of our founders are female, and about 20-25% of our startups are building gender inclusive solutions. This is not by design. It's not like, we set out, to build a gender focused solution, but we do realize that, women, need very specialized, ways to service them. And therefore, but how does one sort of socialize this, with the larger ecosystem and with the right players who can actually drive change? And, in pursuit of that, and MSC is also working with the RBI Innovation Hub, but, we're working with an RBI, is the largest regulator. We set up an innovation hub to promote, more innovation and entrepreneurship in the financial services domain. We worked with them to design a hackathon that would help surface, gender inclusive solutions, gender intentional solutions even. And everything, from thinking about the right problem statements, to what would be some of the factors for success. For example, having incumbents on board as champions of those problem statements, then figuring out, what stage of entrepreneurs to support. And, once they have been surfaced, what would be the follow-on support, that will enable these solutions and these ideas to actually come to life. These are some of the things, that, again, we've also learned, through a lot of trial and error. And I hope that, some of these lessons, will be useful, for innovation labs in the future.
Brilliant. That's a really, really powerful summary. And yeah, I absolutely agree. We're all learning. At least I hope we're all learning. And yeah, I think that your points around ensuring that those different players within the ecosystem are as you said, it's a two-way street. There are things that the startups need and innovators need to understand, but there are also a lot of things that the more traditional players need to understand, whether those are regulators, whether those are incumbent financial service providers or whatever. So I think that two-way street is really important. So thank you so much. And before we let the panel go, we have a brief opportunity for questions. And I'm going to start with one which is a pet obsession of mine, so I picked it out, which is what about bridging the digital divide? Because here we are with very, very tech-driven solutions for a market of which many are the wrong side of the digital divide. Is that beyond the scope of our labs, or is it something that we should be actively working on? Mavis, why don't you start, and then I'll come to Sarah and Priyanka. But let's make this lightning response round.
Yeah, sorry, I'm managing for some background over here with running around. So lightning respond is that it is absolutely not beyond the limit of models. It's actually something that we look at from the beginning. Like, are these models designed to reach, LMI segment, and if so, how? And if we're talking about a population without access to smartphones necessarily, with poor data connectivity, with poor literacy, as Priyanka was saying, well, how are you actually creating a solution that works? And I think that the reality on the ground is that most companies that do service this market end up not just having a digital first solution, but it's solutions that actually do think about that constraint and about bridging the digital divide by having a tech and touch approach, right? In our world, that's how we talk about it. So they do think about offline channels, integrating an offline element to the distribution, whether it's an agent or another type of physical touch point or champions in communities. And that model that has both aspects, it's more common than we may think, even if a lot of startups obviously for scale lead with the tech first element, and even to raise funding, let's be honest, like that's actually what attracts VC capital. But on the ground, like, it's often the combination of both, and we see a lot of obviously power on those from a design perspective to avoid creating unintended consequences and widening the digital divide.
Yeah, I think that's great. And we're seeing, as we saw in East Africa, now in India, if you have a purely digital approach to, for example, credit, pushing the money out is easy. Getting it back without any of that human touch is a lot more difficult. Yeah. Priyanka, exactly. Sorry, apologies, mates. Priyanka, what about your experience? Are your innovation startups addressing the digital divide?
So Graham, when we first launched, we were taking a very traditional approach, very product-centric approach, savings, credit, insurance, payments. But again, we were also new to this, new to this entire ecosystem. What we realized is that, and so while you said, the point that you made about phygital channels are absolutely true, and we see all of our startups, even if they start digital first, they have to converge to a tech plus touch model. So that we are seeing, happen naturally. But the other thing that we've also seen is a lot of our some of our innovations, and so we've also moved or expanded our focus from just having these product categories in our focus areas to now doing what we are calling more pro LMI enabling rails. So what we are saying is, for example, the startup that I mentioned that is building voice enabled UI UX interfaces that allow low literate customers to access digital financial services with confidence and ease. That does not naturally fit into any specific product category, but what it does is amplify the impact of core financial services. So this is one that we very proactively decided to include in our cohort, which has then led us to, like I said, expand our focus beyond just products, to also these kind of enabling infrastructure. The other company we've supported, has a IVR solution that enables large banks to do the last mile touch, with their feature phone customers, which end up being disproportionately women. And therefore, the solution has become very gender focused. And again, what is it that they're doing? They're really helping amplify core financial services. So that banks, whether they are selling credit or insurance or savings, are better able to connect with the customer directly without intermediaries. And therefore, a lot of fraud, gets mitigated. A lot of customer education is happening in the process, which also results in uptake of other digital financial services. So, so a short lightning answer to your question is, absolutely, we need to move beyond, traditional definitions of what financial services to also look at, these enablers which cut across categories, segments, and products.
Excellent. Super. And Sarah, with lightning speed, because I think we have about 30 seconds. What is your perspective? You back these funds or these labs?
Yeah. So my 30-second response is agree, think we're designing around the barriers, designing for the barriers, trying to circumvent them in most cases. But there's also for us is investing in the labs and the individual innovations, and then thinking broader, what are some of the policies that we can simultaneously use our platform and voice as a large bank to advocate for. So one example, again, is thinking through broadband access, which we've recently seen some policy momentum in the US, and I think is the case in other markets, or 3G, 4G, 5G, whatever G, access is also, something that I think to play up the ecosystem approach, something that we would very much lean into on the digital divide.
Excellent. Thank you so much. So with that, and a brief reference from me on the importance of those Kiko agents and broadening their role in this context of a tech touch interface, let's leave it there. Let me thank, first of all, let me thank my team for helping arrange this, Sunil, Samvit, Anil, Akshat, and all the others who've been working behind the scenes. But above all, let me thank Mylis, Priyanka, and Sarah for some very, very thoughtful responses to some fairly impertinent questions. And let me also finally thank those of you who were kind enough to tune in and spend some time with us. Thank you very much. And good morning, good afternoon, good evening, or indeed good night to those of you across the globe.